I got the jazz in the background because I'm feeling jazzy. What is up, YouTube? It's your boy MaceFX here, back with a brand new video. And in today's video, I'm hoping to bring you guys something of value. I'm gonna be going over my trading requirements, which is basically before I place a trade, these are the requirements that I need to have set up in place before I even place a trade or make my next move. So I'm gonna go over my trading requirements. These are still in like a work in progress because I still have a lot of things that I want to add on to this, but I'm gonna go over what I have right now, and I'm gonna be going over my daily studies, what I'm doing right now, and I'm gonna do for the next 60 days in order to improve and hopefully help me predict future price action. Now, this is not financial advice. This is just my individual journey. This is what I'm doing right now. I'm just going over my studies and I'm documenting it. And you know, my goal is to hopefully be able to bring you guys along for the ride when it comes to my trading journey, and hopefully be able to motivate and help some of you guys, you know, because that's all I want. I just want people to do good. I want to show the world that you could come from nothing and you could be something great. Right now I'm sleeping in a futon. I'm not rich. I don't have a Rolls Royce. I don't have $1 million. You know, but I'm gonna get there, and I'm gonna document it so that the world could see. And you know, it's something I want to be able to look back on when I get to where I need to be, because I'm proud of myself and I came a long way. I went from sleeping in a car to sleeping in a futon, which to a lot of people that ain't shit, but to me that means the world. I don't care. Like, I'm progressing as a person, I'm developing, and I'm growing every single day. So hopefully I'm able to motivate you guys and yeah, bring you along for the ride. So I'm gonna bring you guys to the chart in a sec. For now, I want to go over so I'm gonna go over what I have written down in my journal. I'm gonna show you guys, and then I'm gonna go hop on the charts, record a video, a screen recording, and we'll go from there. All right, so yeah, let's get to it. Alright, so boom, instead of showing you guys what it was that I have written down, I would rather just go straight to the charts and give you a visual representation so it can be better for your understanding. So boom, let's go over my trading requirements. First things first, I want to go over what indicators I use. I use these two indicators up here, the ICT time ranges and the periodic range. So boom, place this. I have it set up to where it only delineates Tuesdays, because Tuesdays to me are the most important days of the week. Tuesdays and Wednesdays. So you know, every Tuesday of every week, you'll see the T open up right here at midnight. At exactly midnight, you'll see that T form. It stands for Tuesday. You could have it set up for all the days. I personally just have it set up for Tuesday, because Tuesdays are important. I also use the periodic range. I'm gonna go over what it is exactly that it delineates right now. Boom, periodic range. So boom, it looks crazy. You probably like, oh, holy shit, what the fuck is this? So let's go. Let me press Alt R, and then we'll go right here so I can show you what this indicator does. The periodic range, basically, okay, so boom, at exactly 12 o'clock, what the periodic range does is it gives you this horizontal line, and it stretches it out all the way throughout the week. So you see this line right here? This is the opening price on Monday. The opening price is important. I'm not going to tell you why. If you want to know why, check out my mentor, Inner Circle Trader. He has a bunch of free tutorials. If you want to learn from him. I'm not here to steal his work or, you know, take credit for his work, because it's not my work. This is his work. If you want to learn, you can learn from him. You will not learn from me. I will just give you my exercises and the tools and techniques that I use to, you know, be able to develop as a trader. So boom. Periodic range indicator, weekly opening price is this white line right here, and it stretches out from Monday, Tuesday, Wednesday, Thursday, and Friday. It stretches out throughout the whole week, so you can see what range it is that you're working within throughout that week. What else does it do? It gives you the daily opening price. So the daily opening price is this blue line. You see that blue line right here? This is where price opened up at midnight, and what it does, it gives you it draws the line for you. You don't have to draw it. So with these indicators, you could do everything manually. You don't have to have this indicator on. I just use it because it cuts out a lot of the work for me, and it's much easier for me, and I save a lot of time. But if this indicator ever were to get deleted, I want to give you. I'm just showing you guys exactly what it is that it delineates. That way, you could be able to go down into the charts yourself and do this on your own. So yeah, Monday, you see that blue line? It doesn't pop up for Monday because this was the opening price on Monday right here, and it's delineated with the white line throughout the whole week. So Monday's price is the only price range where you're gonna see the line stretch out throughout the whole week, and it's because that's the opening price for that week. This is the opening price for this day. This is the opening price for this day and the rest of the week. And then this is just for the day, and it's just for each day. So for Tuesday, Wednesday, Thursday, Friday. And you see these shaded boxes. The reason why I like these is because it delineates the high and the low of the day for me. I don't have to add more lines because we're going to have a lot of lines. I'm going to show you guys exactly what it is that we're going to do, and we're going to have a lot of fucking lines, and it might be confusing for some of you, but once you study and you get the hang of things, you're going to know why it is that it's so important. So boom, this is the daily range. This is the high of the day. This is the low of the day, and you can see that it's delineated with this shaded box. And the same thing for Tuesday. This is the low of the day. This is the high of the day. Is delineated with a shaded green box. Each day has a different box, and it does this for every week. So this is the start of the new week. Today is Tuesday, November 9th. So you can see yesterday was Monday. This is a new week. This right here is Sunday's price data. So Sunday's price data is not really that important. But this right here is Monday, so price opened up on Monday. This was the opening price for that day, and it's gonna stretch out for the rest of the week from Monday, Tuesday, Wednesday, Thursday, and Friday. And as you can see, today is Tuesday, so at Tuesday at midnight, you see that blue line is forming, and it's gonna continue to form for the 24-hour period until the day is over, until the next day. And then on the next day, you'll see another blue line, drawn and stretched out for that day. So it does this for every week, for every single week. Every week, and that's basically what this indicator delineates. It's very important to have. It's something that I 100% recommend that you keep on your charts. And yeah, so the next step in my training requirements is to I'm gonna take this off for now, and what we're gonna do is we're gonna draw these lines. So trading requirement number 1, for the start and end of the previous 3 months, you should have a vertical line. Okay, I'm sorry, I don't like the way I wrote this down on my notebook. So boom, for the previous 3 months, delete. For fuck's sakes, come on, George, don't stutter, don't do this. So boom, you want to have a vertical line delineating the start and the end of the previous 3 months. What do I mean by that? So boom, for the start and end of each month, what do we want to do? This is what we want to do. We want to grab this, where's it at? Vertical, right here, vertical line. And we want to, the start of the month. What was the start of the month? November 1st, right? So we want to go to November 1st. All right, boom. So that's this month delineated. This is all the price action for this month right here to the right-hand side. On the left-hand side, we'll see this is all previous price data that you can use to help you move forward on this side in the future. So boom, we want to do the same thing for October 1st. All right, there you go. Boom, now we have 2 months delineated. This is the price action and price data for this month. This whole month, this is what this month did. These are things that you have to keep in mind. These are very important things. I'm not going to explain to you why. If you want to know why, check out the Inner Circle Trader, and you'll find out. We're gonna do the same thing for September 1st. Where's September 1st? Right here. All right, boom. So now we have 2 months delineated, and this is the month that we're working in. So it'll be 3 months, but this month is not completed, so we want to do one more month. You want to do one more month from the start and end of the month. So August 1st. For August 1st, I don't think we're gonna get. Yep. Okay, so August 1st was a Sunday, and price opened up. Oh shit. Price opened up on. It was a Sunday, so price opened up at 5. So we don't get the perfect 12 a.m. opening price, but it's okay. We're still gonna put it right there. Right there. Yeah, right there. Perfect. Alright, so now you have 3 months of data that you can work with to help you predict what's gonna happen in the current month that you're in right now. So why is this so important? Well, because you're gonna use it with the periodic range, and you're going to be able to delineate what exactly it is that price is doing based on the daily opening price, the weekly opening price, where it is that price is trying to go to, what it's trying to reach. You're going to see a visual representation of what price is trying to do. So now, what else do you want to do? You want to grab a trend line, and you want to delineate the high and low for each week of those 3 months. And you want to, I delineate them personally with a pink line, because pink is, I could work with different shades of pink. So I work with 2 shades of pink. I work with hot pink and salmon pink. I'm going to show you what I mean right now. And yeah, so basically 3 months is about 16 weeks. So you want to delineate the past 16 weeks, weekly highs and lows. I'm going to give you that right now. I'm going to give you an example. So boom. For here, we'll start over here. We'll start on this side, because this side is actually complete. You want to go all the way to this side. Let's go to the beginning. Oh shit, I'm way past where I'm supposed to be at. Damn, I'm gonna have to cut a lot of this shit out. Bro, I lost myself. Boom. You want to, okay, so for this week right here, perfect. The start of this week was on Monday. The low of the week formed Wednesday. It formed on Wednesday. So you want to grab the trend line. You want to hold. You want to go to the start of the week, which was right here on Monday. And then you want to hold shift so your line can be as straight as possible, and stretch it out throughout the whole week. So I stretch it out throughout you see that white line that delineates the weekly range? I stretch it out the same length as that line, basically. So boom, this one is going to be dark pink. And we're going to do it the same thing for the high of the week. So Monday, Tuesday, Wednesday, Thursday, Friday. The high of the week was right here. So boom. Now you want to do this exact same thing, and you want to do it for all the 3 months until you catch up to where you're at right now. And your charts should end up looking like this. Bada bing, bada boom. It should end up looking like this. We're gonna go on a higher time frame so that you guys can see it better. 4-hour time frame. Your chart should end up looking like this. So why do I have my charts lined up like this? Why? This one is delineating 1 month, 2 month, 3 month. I didn't do it this month because, I mean, you can if you want to, it's optional, but I didn't because I don't feel the need to go that far back. These boxes right here that I have highlighted are just areas in price where when price gets to these areas, I just want to pay attention. I don't know. These seem important to me. I don't know what they are yet. I just saw, for some reason, it sticks out to me, and I'm doing my own individual research on what it is that these things mean to me. I don't know if this was taught by ICT or not. I just know that I personally, this is something that I see. It's like a little pattern. I don't know if you guys can see it, but it looks like that. And then you can see it right here too. And then you can see that every single time you see that pattern, price shifts and it goes the other way. And I see like small versions of it right here, but they're not that big. And you can see the pattern right here, and what does price do? Goes away from it. See the pattern right here? What does price do? Came down here, it's bouncing away from it. So yeah, that basically, ignore these boxes. There's just something that I'm working on currently because I don't know, something that I saw in price. When you do your own individual study on price and you pay attention to these charts, you're gonna see certain things that other people might not see, or other people might not notice, but they're gonna stick out to you because you're actually putting the work and the time and the effort to, do better for yourself and develop as a trader. So boom, I have 1 month, 2 month, 3 months delineated, and I have the white lines. Mind you, the white lines are just the weekly opening price. The pink lines are the lines that are important. I have purple as well. You don't have to add the purple. I just like adding the purple because I like to delineate certain swings that mean a lot to me. So I do that by using a purple trend line instead of hot pink or silent pink, just so I could delineate, just so it could stick out to me. But boom, for this week you can see the high, the low. For this week, you can see the high, the low. For this week, you can see the high, the low. And for each week, you can see that price was reaching for the low of the previous week. Reached for this low, took it, came up, came back down, reached for this low, took it, came up. And then what the price started doing, it started reaching for the highs. So came up, reached for that high, came down, came up, reached for this high and that high up there, and then you can see that it's going back down. And what is it reaching for? It's reaching for this low right here, this low right here, and this low right here. And what does price do? It reaches for those lows. It goes for those lows. You can see that it goes for those lows until it breaks through it. So this was a low that was broken through. And basically this, what it does is it gives you insight on where it is that price is trying to go. And then when you break it down into these lines right here are just lines that the orange lines, I mean not the orange, the yellow lines are, for example, like this swing low right here. This was an important swing low that I felt the need to delineate. So what I did was I drew a line across it. This low right here is important to me, so I drew a line across it. And these highs up here are relative equal highs. They're important to me. They stick out to me, so I drew a line across for the whole 3 months. So when price gets to these levels, I want to pay attention because I know there's going to be a strong reaction in the marketplace, or a strong move, or something is going to take place because institutions are working within those levels as well. And you just want to see where it is that price is reaching for. Is it reaching for the liquidity from the previous month, the previous month's high, the previous month's low? Where is it trying to go? Right now, this month right here was consolidating. So I'm expecting it was basically moving sideways for this month. And, usually after a consolidation comes an explosive price move. So I'm expecting a huge price move to come within the next few weeks. And we'll see what happens. But you can see right here, price came down for this month, came back up, came down, broke below this low, came up, retested the low, came down, retested this low right here. Now it's going back up. And I'm expecting an explosive price move within the next few weeks. So this right here, where you're basically, my whole purpose of having these trading requirements is to give guidance, to give you a point of view that you didn't have before. You could be able to look at the highs and lows from the weeks, and you can, by doing that and seeing what highs and lows are being taken out, you can determine what it is price is trying to get to, where it is price, what is price reaching for. Is it reaching for the previous week's high, the previous month's high, the previous year's high? Like you will be able to tell where it is that price is going to go. Using that, you could like, knowing that, you can use that to your advantage. You could go down to a 1 hour time frame, and then you could break it down to the daily highs and lows and the daily opening price. So you could see where it is that price is trying to go. So you could frame trade setups based off the higher time frame. Basically, that's what I'm trying to do. I'm trying to get people to focus on the bigger picture, the higher time frame, because it's most important. You want to look at the 4 hour, delineate the previous 3 months, then you want to delineate the highs and lows for those 16 weeks, and then based off of the highs and lows that are being broken, you could tell what it is that price is reaching for, and it'll give you a bias as to what you should be focusing on, whether it should be bullish, like Are you focusing on bullish momentum, bearish momentum? Are you focusing on going up or going down? One of the two. There's only two options, and the best way to do that is by looking at the bigger picture, seeing what highs and lows are being broken, and going along with the trend. Go with the momentum. Go with the bigger institutional traders. Follow the trend. The trend is your friend. Don't chase price. Just see what price is trying to do, what it's reaching for, and align yourself with price. You don't chase it, you align yourself with it. I only have 27 seconds, so I'm going to record a new video, come back with it, and I'll show you guys what it is that you could do with this information that you have. Alright, so we're back. To make it a bit easier for you guys to look, I'm going to remove these boxes. You could also, just like you could delineate the daily highs and lows, the weekly highs and lows, you could delineate the monthly highs and lows. So not only are you delineating the start of this month to the end of this month, you're delineating the high for that month and the low for that month. The high for this month and the low for this month. The high for this month, and price might honestly push lower. So the low for this month could be below this price level, or it could go higher. It all depends. You could use this right here. Gives you a framework to work with. You could look at the weekly highs and lows that are being broken and determine where it is that price is trying to go to. You can also break it down to smaller time frames. So you could use this for swing trading. You could use this for intraday trading, and you could also use it for scalping. If you want to see an in-depth video of how it is that you can go into these charts and get nasty with it, then just show me some support in this video, and I'll be sure to make a new one, and I'll go into charts for you guys. I'll show you guys how it is exactly that I can use these price levels, the weekly highs and lows, the monthly highs and lows, and the delineation of each week, how I could use that to my advantage as a trader, and how I could use it to predict future price moves. So, we could go in there, we could get nice and dirty with it, we could scalp with this, we could do everything with this. One thing you could also do is, so this right here is basically kind of like your technical analysis, your fundamental analysis. When you have to mix your technicals with your fundamentals. So you want to pay attention to your technicals, fundamentals, and sentimental as well. So all three analyses are important. You could pay attention to the dollar index, Euro USD, GBP USD, any pair that's paired against the US dollar. You could go to the dollar index. You could delineate the price ranges for those months, do the exact same thing that I'm doing. And as you know, these pairs they go against each other. So when the dollar index is going up, usually Euro USD would go down, or GBP USD would go down, or if the dollar index is going down, GBP USD would go up. So like, here's an example. You see on Euro USD, you see these equal lows right here. What do you see on the dollar index? You see the same thing, it's just inverted. So equal highs up here. So it's basically the same thing. It's you could use these to your advantage. So use the dollar index, pay attention to news. You could go to Forex Factor. You could use this with news. You could use this as well with seasonal tendencies. So depending on what time of the year we're in, we see certain price movements at certain times of the year. So use this for news. Use this with seasonal tendencies. You could use this with the commitment of traders reports. You could use this with interest rates. You could use this with everything that you could frame this technical analysis, because this is what I'm giving you. This is a full framework for technical analysis. You could frame this with your fundamentals and your sentimentals. So you could use this with news events. Pay attention to the interest rates. Pay attention to the dollar index. Pay attention to commitment of traders reports. Pay attention to seasonal tendencies, and all that combined with technical analysis will give you the best possible result for you to align yourself in the most probable direction. You're not always going to win every trade. You're going to get things wrong still, but you're going to get things right more than you get them wrong. And as a trader that wants to be consistently profitable, I believe that is all that matters. As long as you're right more than you're wrong, and as long as you use proper risk management, and as long as you're disciplined as a foreign exchange market trader, there's no reason why you cannot be successful. Some of you guys are going to be confused watching this. Some of you guys are going to not be confused. Some of you guys will actually become better traders because of this. Some of you guys will need practice. Some of you guys will need to go into the charts, do this multiple times, look at the weekly highs and lows, daily highs and lows, monthly highs and lows, and see how they correlate with each other. And after you train your eye to see these price movements and these price swings, and pay attention to these certain things in certain times and certain days of the weeks, you will open up your third eye. Like I promise you, it's going to be like it's like you're opening up your Forex third eye, and you're going to see things from a whole different perspective, and it's going to be so much easier for you to grow and develop as a trader. Hopefully I'm able to help. I'm not gonna show you too much, because again, this is the technical analysis how I do it right now. Yes, this is my personal way of doing it, but the overall concept was taught to me by my mentor. And if you guys want to learn that, I'll guide you in the right direction. I'll leave a free link to his channel. Everything is free. This is, he's a great mentor. So you can learn everything I'm learning for free. He doesn't charge anymore. He doesn't even do mentorship anymore. So, everything that's on the internet right now that we have from him is free, absolutely free. All you have to do is literally put in the time, put in the effort, put in the work, and you'll be successful. You will be successful. I did not know how to do any of this. I'm not even gonna lie. Like 2 months ago, I would not know what the fuck I'm looking at. Like I would not know what it is that that I'm looking at, why it is that I'm looking at it, how I could use it to my advantage. I would not know how to do this. It took me a good amount of trial and error. I've been studying this content for about 8 months now, so it took me a huge amount of trial and error. I lost money. I've been losing money for the past 2 years, because I've never been profitable. I used to pay for courses. Like I would never pay for a course again in my life, but I used to pay for courses. One of the courses I paid for was Swaggy C, and I'm not profitable. One of the other courses I paid for was for Solo Network. I wasn't profitable. Not saying that these guys, not saying that you can't be profitable, not saying that they don't work. It just did not work for me. It did not make sense to me. Everything that they were doing and saying did not make sense. It didn't make sense to me. And because of that, I started looking for other routes or the things that I could try to learn. And eventually I came across institutional concepts which led me to being introduced to my mentor, which is Michael Joe Huddleston, ICT, the Inner Circle Trader. And, because of him, I've been able to develop and grow as a trader. And I'm going to open up a demo account so that I could trade with you guys. And we could trade together. I will frame setups on a demo account for you guys so you can see the potential. This is not financial advice. I'm not encouraging you to trade with real money. I just want to show you guys actual trades, actual paper trades, actual demo trades that I can get into, and it's the same concept. And I'll get down and dirty with it, and I can show you guys exactly how it is that you can use this to your advantage. But this is how I use this to my advantage. I go in a higher time frame, see what price is trying to do, then I break it down to a lower time frame, and then I use concepts that I learned from Michael, like optimal trade entry, time and price theory, Persian revert, and I use those to my advantage. And I get in here and I look at certain times of the day, and I get that's where all the work is done. But this for me is scalping. I like to intraday scalp kinda, so I take small trade setups throughout the week. I want to get into more of like intraday swing trading, which is going to take some time for me to get used to, but I'll get there. For now, I like what I'm working with, and I feel comfortable with what I'm working with. So I'm going to try to perfect this within the next 60 days. So now that I got this part out the way, I want to go into my studies. What do I study as a trader? What do I pay attention to? What do I look at? What do I, what is it that I study? So I'm gonna show you right now. So we got that out the way. Hopefully you guys were able to understand some of it. If you weren't, it's okay. You will sooner or later, as long as you study and you focus on your trading the way you should be. You're gonna understand why what I gave you guys was important and how it was that you could use it to your advantage. I want to show you my studies. What am I doing to study every day? What am I studying every day? What is it that I'm studying? How am I studying what? Like here, I'm sorry, I keep repeating myself, but I'm gonna show you guys right now. So this is what my journal looks like when I study, and this is exactly how I study. So what I do is I study the daily schematic. This one was for November 8th. I write down the day of the week, Monday, the pair, dollar index. I mean the dollar index. The gold against the dollar, time frame, 5-minute chart, year cycle. We're in daylight savings right now, so we're 1 hour ahead of time. And I write down what it was that price did. So I'm gonna go over these. I'm gonna read this over to you. Then I'm gonna go onto the chart and give you a visual representation of what I just read. So price opened up at midnight. From 12:50 to 1 a.m., price made a very slight rally, less than 2 pips above the opening price. Price then remained still from 1 to 110, and then made about a 6-pip rally to the downside from 115 to 210. At exactly 210, price made its first temporary low for the day. From 210 to 315, price was in a tight consolidation. At 320, price began slowly moving downwards until it broke out of that consolidation at 350, breaking the first low of the day and creating the second low of the day at 355. From exactly 4 a.m. to 5 a.m., price retraced back into the previous consolidation, wicking slightly above it. From 5 a.m. to 6:10 a.m., price was in a second consolidation phase. From 6:15 to 6:30, price moved downwards into a bullish order block that was created in the rally from 4 to 5. From 6:35 to 8 a.m., price rallied back up into the second consolidation where there resided a lot of equal highs due to both consolidations. At 8:10, price moved down into another order block created in the rally from 6:35 to 8. From 8:15 to 8:25, price created a 7-pip rally to the upside, breaking back above the opening price, creating a short-term high, and then retracing from 8:30 to 8:35 into an optimal trade entry, and then rallying up from 8:40 to 9:15, breaking the previous high with an 8-pip move. From 9:20 to 11, price retraces down for a second optimal trade entry. Then from 11:05 to 125, we get another rally, creating the high of the day. The trading day is now over for me personally. I only trade up till probably like around 12 p.m. I don't really look at anything past 12 to 2 p.m. And then boom, the trading day is now over. I don't expect to participate in a move until Tuesday or Wednesday, New York session, 6 a.m. to 11 a.m. I gotta change this to 12 or sometimes 2, it depends. So I also take note of what it was that I saw, how long price stayed there, certain things like this. So how long did price remain under the opening price? From 1:25 to 8:20 a.m., so 6 hours and 55 minutes. When did price start to move higher and how long? At 4 a.m., price began to move upwards until 9:20 to 1:30. So from 5 to 9 hours. Bull or bear? What kind of day was it? It was a bullish day. Where did optimal trade entries form? They formed after 4 a.m. One formed at 4:45 to 6:30. It took 1 hour, 45 minutes to form. The second one formed from 7:10 to 8:10, so 1 hour to form. And then I drew the 5-minute schematic for that day, for that specific day, what price did. So this was the opening price. This was the 2-pip rally. This was the 6-pip rally to the downside. This was the first low of the day. This was the second low of the day, the second and final low of the day. This was the first optimal trade entry that I saw, the second optimal trade entry, the third optimal trade entry, and the fourth optimal trade entry. So in total, we had 4 optimal trade entries that we could have participated in throughout that day. That's 4 trading opportunities in one day. So don't do this every day. You don't have to catch every single one of them. You just have to catch one optimal trade entry that will get you a certain amount of pips for that day, and then your trading day is over. And then these are the times. So this was 12 a.m., this was 2:10, 4, 6:30, 8:10, 8:35, and 11. Those were the important the important times where I saw some of these moves take place. And yeah, basically I'm doing this every single day. I'm writing down what day it was, what happened, what time frame I was on, and I'm drawing the daily schematic out, and I'm doing that every single day. Why? Why am I doing this? All right, so we're in the daily schematic that I studied in my journal. So we're on gold, XAU USD, 5-minute time frame, and we're gonna go every single detail that I wrote down in my journals. we're gonna start off here. So, what did I write down in my journal? Sorry, if I look at it, I wrote down. Okay, so boom, price opened up at midnight, which it did. Midnight right here, 12 in the morning. Price opened up. From 12:50 to 1 a.m., price made a very slight rally, less than 2 pips above the opening price. So from what was it, 12:50, 12:50 right here, and look at the time frame. Look at the time frame at the bottom. It says November 8th, 12:50. You see the start of this slight rally, and it moved up higher above the opening price, which was right here. This is the opening price. Price came up, moved higher, and it remained there until 1 in the morning. So price remained still from 1 in the morning to 1:10. So what did it do from right here? This is from 1 in the morning, 1:05, 1:10. Price remained in this small tiny consolidation for that small period of time. At 1:15 to 2:10, price made a 6 pip rally to the downside. So from 1:15, which is right here, all the way to 2:10, you see this small rally to the downside. It was a 6 pip rally to the downside. However, pips on gold are counted differently, but I just do it like this to make it easier for me. So mind you, this is not exactly 6 pips. It's just my way of counting pips. I have my own unique way of counting pips when it comes to gold. Because gold is different. You don't count certain like indices and okay. I'm not even gonna explain that. That's a whole different thing. Anyways, boom. At exactly 2:10, price made its first temporary low for the day. So what time is it right now? It's 2:10, and you see this first low. This is the first low of this 24-hour period. This 24-hour period, the first low that was made was right here. The first low for the day was made right here. What's next? From 2:10 to 3:15, price was in a tight consolidation. So from 2:10, from the low of this candle to 2:15, which is 2:15 or 3:15. From 2:10 to 3:15. I'm sorry, from 2:10 to 3:15, price was in a tight consolidation. So 2:10 to 3:15. Where's 3:15? 3:15. Price was what in a consolidation, right? So boom, we got to 3:15. So what's next? At 3:20, price began slowly moving downwards until it broke out of that consolidation at 3:50, breaking the first low of the day and creating the second low of the day at 3:55. So that was a pretty big sentence. We're gonna go over it right now. So at 3:20, price began slowly moving downwards until it broke out of that consolidation at 3:50. So at 3:20, at 3:20, price began moving downwards until it broke out of that consolidation at what? 350. This is the candle that broke out of this consolidation right here. Let me highlight it for you, in case you can't see it. From this low to that high right there, we were in a consolidation. From that low to that high, we were in a consolidation. This was the candle right here that broke out of it at 350. And then what's next? Breaking the first low of the day. So breaking the first low of the day, which was right here, and then creating the second low of the day at 355. So it broke this first low of the day, and then it made the second low of this 24-hour period at 355 right here. What else? From exactly 4 a.m. to 5 a.m., price retraced back into the previous consolidation, wicking slightly above it. So from 4 in the morning, which starts right here, this is 4 in the morning, all the way up to 5 in the morning, price retraced. It made a bullish retracement back into this consolidation, and you see this wick? It broke slightly above the consolidation. So what else? From 5 in the morning to 6:10 in the morning, price was in a second consolidation phase. So from 5 a.m. to 6:10. So 5 in the morning, all the way to 6:10. 6:10 right here. From 5 in the morning to 6:10, price was in a second consolidation phase. So let me draw the second consolidation for you guys. This is it. This was the first consolidation. This is the second one right here. And then what is this? From 6:15 to 6:30, price moved downwards into a bullish order block that was created in the rally from 4 to 5 a.m. So from 6:15, where's 6:15 at? From 6:15 to 6:30, 6:15 to 6:30. This is 6:30 right here. Price moved downwards into a bullish order block that was created in the rally from 4 to 5. So you see this rally right here? This is the rally from 4 to 5. Within that rally, we created a bullish order block right here. I'm going to outline right there, and I'm going to drag out into time. It's not going to be perfect because my shit is laggy right now, but as you can see, price retraced down into it. This is a bullish order block, and price retraced into it from 6:15 to 6:30. What else? From 6:35 to 8 in the morning, price rallied back up into the second consolidation where there resided a lot of equal highs due to both consolidations. So from 6:35, which is right here, to 8 in the morning, which is all the way up here, price retraced back into this consolidation right here. And let me see, what does it say? Consolidation where there resided a lot of equal highs due to both consolidations. So now that it retraced back into this consolidation, what do we have here? This is equal highs, equal highs, equal highs. So all this right here are equal highs, relatively equal highs. Not exactly, because as you can see, price wicked slightly above it. But these are relatively equal highs that we have right here. So boom. At 8:10, price moved down into another order block created in the rally from 6:35 to 8 in the morning. So at 8:10, which was about right here, at 8:10, price retraced down into another order block, which was right here. This order block was created from the rally that took place from 6:35 to 8 in the morning. So from 6:35 to 8 in the morning, we got a rally. And in that rally, throughout that rally, we created a bullish order block right here. So boom, what does price do? It retraced into this order block. And then what does it do after? You can see it makes that large move to the upside. So from 8:15 to 8:25, price created a 7-pip rally to the upside, breaking back above the opening price, creating a short-term high, and then retracing. So from 8:15 to 8:25, 8:15, where's 8:15 at? 8:15 to 8:25, 8:15, 8:20, 8:25. Price creates this rally that I was talking about, and it breaks back above the opening price. So this is the opening price right here, where price opened up at midnight, and price rallied up, broke above the opening price, breaking this short-term high that we created, and then it retraces back into. I'm sorry. I just lost myself. So from 8:15 to 8:25, price created a 7-pip rally to the upside, breaking back above the opening price, creating a short-term high, and then retracing from 8:30 to 8:35 into an optimal trade entry. So from 8:30 to 8:35, it retraces back down into an optimal trade entry, which if I grab my Fibonacci and I bring it down from this low to this high, and we're using the bodies of the candle. Right there. All right, boom. This right here is an optimal trade entry. It hit this is the 62%. This is the, what is this? Wait, hold on. I'm so confused. I forgot my levels. Fuck. The 62%, I'm not sure. I know damn, I forgot my levels. How could I forget my levels, bro? I think I'm going brain dead right now. But as you can see, price retraced back down and it hit this level right here. It's not the 62. This is the 62.5. This is the 70 something, and this is the 79% retracement level. So I think this one is the 71.5. I'm not sure what this one is. But anyways, if you set the fib up from this low to this high, which is one price swing, you get a retracement down into an optimal trade entry, as well as this right here is an order block, and price comes down and hits that order block, and then you get a sharp rally to the upside. So let me read that sentence for you guys again. I'm sorry. So yeah, from 815 to 825, price traded a 7 pip rally to the upside, breaking back above the opening price, creating a short-term high, and then retracing from 830 to 835 into an optimal trade entry. Then rallying up from 840 to 915. So from 840, where's 840? 840 all the way up to 915. It's at 915. Price rallies up, and then breaking the previous high with an 8 pip move. So breaking this high right here, the previous high, and this right here, I count it as an 8 pip move. From 9:20 to 11 a.m., price retraces down for a second optimal trade entry. So from 9:20, where's 9:20? To what? To 11 in the morning? 11 in the morning, it's like all the way over here. Price retraced back down. It retraces down for a second optimal trade entry, right? So if I grab this fib and I place it from that low back up to that high, to this high, we get a second optimal trade entry at the 62% retracement level. We could either do that, or if we really wanted to, you don't want to take that full price swing, you can, the most recent rally up, which was right here. This was the most recent rally up, broke above this high, and then it retraced into a second optimal trade entry, which hit this level. It wicked below the 79%, but that's okay. It didn't close below it, it whipped below it. And then what does it do? It hits TP1. For both of these optimal trade entries, it at least hit TP1, which is right here. This is take profit, then this is target 2, target 3. Oh, wait, no, this is take profit, then this is target 1, target 2, and then target 3. Of course, you don't get the fill every time, so you have to manage your trades, and you have to, with me, I go in for a certain amount of pips a day, and that's it. Once I get my certain, I don't care if it hits 1, 2, or 3. I don't expect it to. I just expect that after price gets into my optimal trade entry, I expect a short-term rally. That's what I expect. Don't know if it's going to hit target 1, 2, or 3. So that's why it's very important to manage your trades. If you get in right here and price reaches this level, if you want, you could break even. Set your stop loss to break even, and then you could write it out and either, what is this? Did this hit at least the first level? No, it didn't. It came close to, but it didn't. And you could take first profits up here, second profits up here, and then close out your trade fully up there. But you know, that doesn't work out every time. So, you know, it's smart if you just go for a certain amount of pips a day, and you'll be alright. So yeah, what's next? And then from 1105 to 125, we get another rally, creating the high of the day. So from 1105 to 125, 1105 is right here. 125 is, where's 125? 125 is right here, and it breaks above this high. It was a short break. It wasn't that much of a break. It was a small break, and it created the new high of the day. For me, after this time, trading for me is usually over. This is the moves that you want to focus on right here during this time frame. So between London and New York session, this is the move that you want to focus on, that you want to capture in your trading days. My trading days usually over by 1:30, 2 o'clock, if not 12 p.m. And then price ended up creating a new high for that day, but I don't really care. I'm not paying attention to that because these are not my trading hours. I don't give a fuck about this. This is not my trading hours. These right here are what matter to me. And that was my daily schematic for that day. So how long did price remain under the opening price? From 125 to 8:20 in the morning. So from 125, at 125, price moved below the opening price, and it remained underneath the opening price for how long? From 125 to 8:20 in the morning. So 8:20 in the morning is over here. And this is how long price remained under that level. So 6 hours and 55 minutes, price did not go above the opening price. When did price start to move higher and how long? So at 4 a.m., price began to move upwards until 9:20 to 1:30. So from 4 in the morning, so price was moving, all this was bearish movement, and price began moving higher, overall higher. You see this? This is overall higher movement. It began moving higher at 4 in the morning. So at exactly 4 in the morning, price began moving higher. And it stayed moving upwards. I say until 9:20 because this is mainly like the big portion of the move. But I also put 1:30 because this is 1:30 is like, this is where the other this is where basically like before 2 p.m. my trading day would most than likely be over. So this is the price moves that you want to focus on. I don't really care about this. Price broke above it, created a new high. I don't give a fuck. I want to focus on capturing this move right here. So yeah. So from 5 to 9 hours, price was rallying up. All of this right here is a rally up. How long did it last? 5 to 9 hours. Within those 5 to 9 hours, you could get in a trade. You could have gotten in right here. This right here is a small optimal trade entry. It hit an order block. You could have gotten in right here. You could have rode it all the way up until, what time is it? Till 9:20 in the morning, and you could have gotten out if you felt comfortable, or you could have rode it up until your trading day was over, which is for me is like around 2 p.m. So it depends. My hours vary on how I feel, on what type of day it is, and on what it is that price is showing me. But this is the daily schematic that I was studying. If you do this and you study this every single day, look at already the results that you see. You're starting to see certain things in price that you didn't see before, and you're starting to take note. You have to take note of everything. How long price remained above a certain level, how long did it remain below it, how long did it take for it to rally, how long, everything is important. Time and price, that's what it is. It's all about time and price. It's not, you don't have to pay attention to all these crazy patterns that people talk about, like double highs. Like, yeah, those are important on a higher time frame, but you don't have to focus on that for now. Like on the smaller time frames, it's all about time and price. Even on the higher time frames, it's all about time and price. So you have to look out for certain things, and after studying this for a certain amount of time, you have no choice but to progress. And I promise that you will see success. Like success not meaning profitability, but success as in you'll find more consistency. And yeah, that was it for this daily schematic. Now today, guess what I'm gonna do? Today is Tuesday, and what am I gonna do? I'm gonna sit my happy ass down, and I'm gonna study this daily schematic. We're gonna see what today did. Today was pretty interesting. So I'm gonna study this daily schematic. Why is it moving? Why is my chart moving? I wasn't even moving it. My shit is lagging right now because I'm recording. But I hope you guys were able to gain something from this. And yeah, I'm gonna go back to my phone camera so you guys can see my face. I just gave you the framework for technical analysis, what I do, what I use in my technical analysis, and I also gave you something to study. So every single day, wake up, study your daily schematics, your weekly schematics, your monthly schematics, and you'll be able to predict future price movements, and you'll be able to know what you're looking for, and all that mixed with your technical analysis, news, seasonal tendencies. Once you align yourself with the institutional traders and you look at interest rates and everything that you need to, and you mix fundamental with technical with sentimental, you're good to go right there. And then you'll know whether the market is bullish or bearish, and you'll know where it is you need, like you'll know how to align yourself with price action instead of chasing it. Most people chase price. The people that chase price are the people that lose money and get stopped out. Don't chase price. Align yourself with price and ride it with the banks. Ride it with the bigger institutional traders. Like I said, don't chase it. Align yourself with it. And yeah, that's basically it for today's video. Hope you were able to learn something new. Until next time, peace out.